Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Wednesday, October 28th. Greetings from Hollywood. Well, when it comes to these indices, if you look at the NASDAQ market, let me just show you what happened with that one. Here's yesterday's action. We are looking for follow-through. We're looking for, and that's what we had yesterday, we're looking for more of the same. I still think we need to be cautious because of the levels that we're reaching. Also, a market that traded through an exit point was the Dow, and the dollar value from this buy point to that sell point was $1,500 a contract. That would be the economic value of that type of move if someone had done that. Just again to give you a feel for what those numbers represent. Now, let's continue on here. So we're looking for some weakness in these stock indices on a cautious perspective. And let's take a look then at what's happening in the currencies. Remember, if it's red on these charts, it means the US dollar is getting stronger. And that's what we're seeing. We're seeing the euro continuing weaker. We're seeing the same thing for the Swissy and the Australian dollars. Now, the Australian dollars is an interesting one too, because it also traded through that sell point. 90 was the level, or 80, excuse me, and we went down to 79, one tick beyond it, which means that sell point would have been activated and a short position would have been initiated. That would be the underlying concept. That represented this move here was 440 ticks, or $4,400 per contract. Again, I think we need to be cautious here. Here's the benchmark candle. We're towards the bottom of that. I don't think this is a layup trade. In other words, that we expect immediately continued weakness. I wouldn't feel that way about the structures that you and I have in place here. So on the short side, I'd want to be cautious about what these markets may be showing us. Including our friend the Canadian dollar. It has slowed down low enough, we can see in yesterday's action, to find some buyers. And today we'll see, who is that? Is that a little profit taking, or is that a change in behavior? And right now I'd want to be conservative on the buy side and let today unfold to really make more of an informed decision about that marketplace. And in the interest rate markets, we finally see some strength coming in here on the short end of the curve. They did move up a tad bit. That's a good sign for continuation. I would not be looking for an explosive move at all in today's action across the board with all these interest rate markets. But one thing that did happen is that we did get low enough to find these buyers, which would have closed out that short position. So the dollar value, that would be the concept. The dollar value between these two lines in the notes is $687.50. And the dollar value here in the bonds between that sell point and that buy point is $937.50. That's the dollar value of those move, and we are looking for unchanged to higher, smaller range in the interest rate markets. The metals, well, we saw continued weakness in gold. This behaved properly. After that bigger move, this is a smaller move here. I think we need to be cautious, though, about expecting this market to move lower. Nothing telling us to abandon a short position if that's a position we had on. I just think we need to be sensitive to the location, structure-wise, and the type of pattern that we saw here, which is a false sense of security. That's what I would call it. Silver, though, on the other hand, really did accelerate. It's very symmetrical. The way we came in is the way we're going out. Today, we are not looking for that kind of move, though, in silver. We're looking for a market to rotate back and forth, basically in this range, 1680 down to about 1650. Copper looks like it still wants to go higher. But the challenge is ahead of it at 305, pretty heavy duty. But the bias here for the structure that's set up is for another push back to the upside. And when it comes to energy, wow, we see crude oil. It's kind of fast as it backs off, it's finding buyers. But if you look at this action, it's logical. Bottom of the benchmark, from my perspective, Bottom of the benchmark candle, shadows on both sides imply that buyers are coming into the market. I mean, this is behaving like I'm talking about the possibility for those other markets. Natural gas, we're looking for continued weakness in this market, but again, we are at levels that we need to pay attention to. And this market could start to rotate back to the upside, just like crude oil. In the grains, we see continued weakness. The size of yesterday's action really surprised me. We are also in all of these markets, in all of these grains, we are at levels that are significant. So, on the short side, if we were short these markets, we'd want to stay short. But I think it's not going to be so much today's action, it's going to be tomorrow's action that you and I are really going to have to pay attention to when it comes to these grains. Well, this concludes today's market studies. I hope you found a few ideas helpful. Looking forward to being with you again tomorrow. And in the meantime, take care.